Hello everyone, welcome to SST College of Arts and Commerce, SST Edupedia. I am Assistant Professor Deepika Valecha. Today in this video we will be learning about a topic which is income from other sources of direct tax subject, which is there in second year Banking and Insurance semester 3 and also TY/BCom semester 5 with SYBCBI as well. Now, what is income from other sources? See, in income tax, under the Income Tax Act 1961, the income of an assessee is calculated on the basis of the various heads. The income is categorized under the income from salary, income from house property, income from business or profession, capital gain and other sources. And according to the various provisions given under the Act, income of an assessee is calculated, whether the tax will be applicable on such incomes or what the expenses, which are the expenses which will be allowed as a deduction or not. So here in this video, we will be learning basically about income from other sources, which is the fifth head of under the income tax heads. Now, the income which is apart from all the four heads which I told right now, which is salary, house property, capital gain, business and profession, all the incomes which do not come under the previous heads will be considered and will be taxed in the last, and that is the final head, that is income from other sources. So, income which is not exempt and cannot be charged under the any other heads will be charged under this head. There are n number of incomes which an assessee gets, like dividend income, interest income, gifts from their relatives, friends, and also the amount received under the key man insurance policies, and many more things are there which cannot be categorized under the other heads. So that will be taxable under the income from other sources. So here we can say all dividend incomes received by the assessee, interest on the deposits, securities, interest on the fixed deposits and also on the shares and securities will also be taxed under this head. One-time income like winning from horse races, winning from puzzles, lotteries, card games, etc. will also taxable under this head. As under the law, as per the Income Tax Act, there is no deviation, there is no difference between the income which is as illegal or legal income. So whatever the income which is earned under the gambling also, that will also be taxed under the head income from OS. OS, that means other sources. So what is the basis of charge? Under general provision under section 56(1), income of every kind which is not to be excluded from the total income will be chargeable under this head. Like the other heads which I have already explained you, which are mentioned here on the slide. Coming to the various specific special provisions relating to the incomes, we have dividend income, winning from lotteries, crossword puzzles, card games and many more, betting, gambling. Some received by an assessee from his employee as in contribution to staff welfare, income by way of interest on securities. Securities may include debentures, bonds, government securities and many more. Rental income of machinery and furniture let out or on hire. See, we have already a specific head for income from house property, but that is a house property income. If apart from house property, any other machinery or fixed assets which are movable, which are given on a rent, and the rental income if it is earned, that income will be charged under the income from other sources. Rental income on letting out of a plant and machinery, furniture, or many more other movable assets will also be included in this section. Any sum received under the key man insurance policy, including bonus, if it is not included into the salary or business income, then only it will chargeable under the income from other sources. Key man insurance policy is an income which can be written into the income from salary head or income from business and profession. So if it is not charged earlier, then only we will charge in this particular head. Gifts received with or without consideration by an assessee. Any sum which exceeding rupees 50,000 is received by an individual or Hindu undivided family, the entire amount will be chargeable under this head. Any immovable property exceeding rupees 50,000 or any movable property exceeding rupees 50,000, whatever an assessee gets with or without consideration, that amount will be chargeable. In case of the dividend income, the amount which is the dividend income, whatever the income is earned, to collect that dividend income, if an assessee is spending some or the other expenses, so that expense will be allowed as a deduction from that total income and the remaining amount will be chargeable. I would like to bring this to the notice that income from dividend from Indian companies is exempted from tax. So here under section 1034, Indian companies, if they are giving the dividend to their shareholders and if an assessee is earning that, that will be exempted. Deductions in respect of employees' contribution towards the staff welfare schemes towards any welfare fund of such an employee is allowable as a deduction. So if a company is making the staff welfare, like any contribution is done by the company in terms of the for the benefit of their employees, and if any deduction is there, like if a company is spending any amount for the purpose of that welfare, so that amount which is expense will be considered as a deduction. Repairs, depreciation in case of letting out of a plant and machinery or furniture. See, if an assessee is earning 50,000 as in rent from giving the letting out of the machinery or a plant on a hire, for example, 50,000 is a rental income which an assessee is earning, and for earning that income, if that machinery on that machinery, if depreciation of 2,000 is there, and if any amount of any other repairs or maintenance work is there, so an assessee is spending 5,000 rupees as an expense on that particular machinery. So the 5,000 will be allowed as a deduction from the total income. That means 50,000 was an income earned, 5,000 will be the deduction from that income. So 45,000 will be the amount will be chargeable to the tax. Coming to the next part, which is deductions under section 57. In case of an income in nature of family pension, if an assessee is getting the family pension, the amount which is allowed as a deduction will be 33/1/3% of that amount received or 15,000, whichever is less. For example, if an assessee is getting 45,000 rupees as a family pension amount, so we will calculate whatever the amount of 45,000, whatever will be the 33.33% is there, that means 1/3 percentage, 1/3 whatever will be the amount, that amount or 15,000 is the maximum deductible limit, whichever is less, that will be allowed as a deduction. Any other expenditures not being in the nature of capital expenditure, laid out, expended wholly or exclusively for the purpose of making or earning such income. Capital expenditures are not allowed as a deduction. For example, if a assessee is purchasing any other machinery and that amount they are claiming for the deduction, that is not allowed. Revenue expenditures or any expenditure which is incurred to earn that income, that an amount will be allowed as a deduction from that particular specific income. Now, amount not deductible. Which are the categories of amounts? which will not be allowed as a deduction, which is mentioned under section 58. In case of any SST, if an SST is making any personal expenses or if an interest is payable outside India, and if the TDS amount, that is tax deducted at source, is not deducted, or any salaries if it is payable outside India unless tax has been paid thereon. That means whatever the income which is paid outside India, the amount will, if the TDS is not deducted, that amount will not be considered or will not be deducted from the deductions. The provisions of section 40A shall so far as may be applied in computing the income tax chargeable under the head income from other sources. So here provisions of section 40A are also applicable. In case if it is a foreign company and if SST is getting any income from that company, so here section 44D will be applicable for the same, and no deduction will be allowed in respect of any expenditures or allowances in connection with such an income which is related to the winning from lottery, winning from crossword puzzles, or gambling or betting. So here, if for example a person is getting, a person has one amount of 50,000 from lottery, and if he has spent only 100 rupees for purchasing that lottery tickets, so we will not say here that if the 50,000 rupees is my income and 100 rupees is my purchase of lottery tickets ka expenditure, so I will get the deduction of 50,000 minus 100, that much amount I should get an expenses ka deduction. No, that is not allowed, because again this is the income which is a speculative in nature. So whichever the income, like a horse races, cards games, puzzles, or anything relating to speculative or gambling incomes, whatever the expenditures are done on that particular income will not be allowed as a deduction. Now coming to the next point, we have gifts. There are some points which are exceptions in relation to the gifts. See, we have seen earlier an SST, if he or she is getting the gift which is with or without consideration, if it is more than 50,000 rupees, that will be chargeable. But if it is from relatives, if it is on the occasion of the marriage of an individual, or if it is under the will, inheritance, and if it is in the will, like in terms of contemplation of death of the particular payer, so in that categories, that income, that 50,000 category limitation will not be considered. Here the whole amount will not be charged as a income. Now if we talk about relatives, who are the relatives, who can be termed as relatives? Here relatives means spouse of an individual, brother or sister of an individual, or spouse of a individual, brother or sister of either of the parents of an individual. So in terms we can say any lineage or ascendant or descendant of an individual will be considered as a relatives. Coming to the next point of a video, we have clubbing of income. Now which amount of an income will be clubbed under this head? We have section 60, which is transfer of income without the transfer of asset. If for example asset is not transferred on the name of another person or an SST, but the income is given to that person, that is also clubbed in this particular head. Club, it will be clubbed in the hands of transferor who has transferred this income. Section 61 states the revocable transfer of assets, and revocable transfer includes the income which is clubbed in the hands of the transferor who transfers the assets. Now we have salaries, commissions, fees, remuneration which is paid to a spouse from the concern in which an SST is working, in which an SST is having substantial interest. So that amount which the spouse is getting, that will also be clubbed into the income of the SST, provided that should be not include the technical or professional qualification or remuneration is solely attributable to the spouse. That means what? For example, if for example a spouse of Mr. A is CA, chartered accountant, and she is working in a company as a chartered accountant, she is having a technical knowledge and qualification and all in relation to a particular work. So if she is earning a salary from that particular company, so that will be taxable in the hands of Mrs. A only, it will not be clubbed into the income of Mr. A. Section 64 subsection 1 clause 4 states that income from the assets transferred directly or indirectly to the spouse without any adequate consideration will also be clubbed in the income of SST. That means there should be the reasonable reason or a particular factor on which basis the income is clubbed or income is given to the spouse. Income from the asset transfer to sons' wives will also be clubbed into the income of an SST. In simple terms, we can say whichever the income which is given to the family members like spouse or son's wife or any relative within of the blood origin. So here in that, if there is no specific reason behind the work done by them, then that income will be clubbed in the hands of SST only. So here also we can say transfer of an assets by an individual to a person or an association of persons for immediate or deferred benefit of spouse or son's wife will also be clubbed into the income from the income of the SST only. Where the clubbing is not applicable, if income of a minor child is there suffering from any disability under section 80U, income on account of any manual work or technical work is done, income of an account of activity involving application of their skills, knowledge, experience and also the technical qualification, and also if minor is earning and if his or her income is less than 1500, then that amount will not be clubbed in the income of SST. Now we have income from HUF, from the property converted by an individual into HUF property will be clubbed in the income which is included in the hands of individual and not in the hands of HUFs. So even clubbing applicable even if the converted property is subsequently derived from the spouse. From such converted property will be taxable in the hands of an individual. In simple terms, whichever the income which is related to the SST, and if the asset is transferred to the spouse with or without any reason, adequate reason, then only the income generated from that particular property will also be clubbed. So with this we have seen the basics related to which are the provisions relating to the section 56 to 59 of income from other sources. Thank you so much. Thank you.